Hey everyone. Over the last couple of weeks, I've highlighted the key trends shaping office and multifamily investments. And this week, as the ICSC Retail Conference in Las Vegas gets underway, I'll focus on what's happening with retail investments. U.S. consumption has remained remarkably resilient and durable over the last year. Despite numerous potential headwinds, retail sales have continued to rise even on an inflation-adjusted basis. Job creation through the first 4 months of 2026 have been positive, though somewhat lackluster, averaging about 76,000 new positions per month. That's stronger than last year's monthly average of about 10,000 jobs per month, but well below 2024's monthly average. In addition, consumer sentiment fell to a record low of 48.2 in preliminary May data, potentially signaling consumer reluctance to spend. And CPI inflation has begun to surge, climbing by 50 basis points to 3.8% in April, its highest reading since 2023. In addition, household debt has reached an all-time high of $18.8 trillion, with credit card debt at a record $1.3 trillion. But these metrics, which are no doubt restraining consumption to a degree, are just part of the picture. Healthy wage growth, which outpaced inflation over the last 3 years until last month, has bolstered consumer balance sheets. So while consumer debt is elevated, when it's measured as a percentage of income, the metric is less alarming. Overall household debt as a share of income is at its lowest level in more than 15 years. In addition, household savings, including money market funds, increased by 3.4% over the last year to its highest level on record. That suggests consumers still have a lot of purchasing power available if they choose to spend. So despite the headwinds, retail sales continued to grow by 4.9% over the last year. And even on an inflation-adjusted basis, retail sales are up by 0.5% compared to a year ago. Now, a lot of the growth in retail sales has been through the internet. On a year-over-year basis, non-store retail sales are up by 11.1%, but brick-and-mortar stores still grew by 3.2% over the last year. Those modest gains are helping to reinforce multi-tenant retail property performance. Still, as of the first quarter, multi-tenant vacancy rates rose by 20 basis points from the fourth quarter of last year to 6%. Space absorption in the first quarter was modestly negative as retailers have become cautious in their expansion strategies. But new multi-tenant retail construction remains very limited, at its lowest level since 2011 following the financial crisis. So new supply risks are minimal. That said, multi-tenant retail rents have continued to rise slowly, nudging 1.1% higher compared to last year. Looking at single-tenant retail, the vacancy rate increased by 10 basis points to 4.6% in the first quarter of 2026, with rent growth of 1.1%. The vacancy rates of single-tenant subsectors vary considerably, with department stores at the upper end with 6.4% vacancy as of the first quarter. That's followed by drugstores with 6% vacancies, restaurants at 3.5% vacancy, grocery stores at 2.6%, quick service restaurants at 1.5%, and the lowest vacancy rates in the subsector is convenience stores with just 1% vacancy. From a transaction perspective, retail property investors remain active. On a trailing 12-month basis through the first quarter, the total number of multi-tenant retail property trades was about on par with the level seen in 2021, and they're just 9.6% below the peak trading year of 2022, with cap rates averaging in the 7.3% range. Single-tenant investment activity has likewise been robust. Deal flow over the last 4 quarters was just 4.2% below the peak year of 2021, and it's well above the historic norm. Single-tenant cap rates are in the 6.6% range, but vary considerably depending on the remaining lease term and tenant credit. Marcus & Millichap just released 2 new reports focusing on the single-tenant retail sector, and you can access both of those reports on our website. These reports offer additional details and insights on single-tenant retail investments to help you keep your eyes on the horizon.